Write this down, grab a pen. If you flip it every day, that's not investing, that's a bet. You need the sound framework, your intellect to go invest.
All right, ladies and gentlemen, I got your watch list coming into August 22nd, 2019, and the Fed tricked the stock market? That is true, my friends, and that's what we're going to explain here today. The Federal Reserve had their FOMC minutes that they released, and again, tomorrow is the start. We're going to start hearing from the Feds from Jackson Hole, but the minutes revealed a little bit of things that added a level of uncertainty to what people were expecting. Not too much. There's that part. And then the yield curve briefly inverted a tiny bit. It's already bounced back up like it did last time, so we have to go over that. I got your keys for tomorrow. I'm going to talk about the plays that we made today and then what we're looking at tomorrow. So you guys know what to do. Drop your like on the video. Make sure you are subscribed. We post these watch lists every single night, and then be there tomorrow morning. We are live Monday through Friday, 30 minutes before open. It's first link in the description. It is pinned in the comments, and the most important thing you need to do, post your watch list below. Let us know what stocks you're watching, anything. And again, it has been a lot of the theories we've been looking at have been playing out, so I'm excited to see what happened. The Fed caused some volume and movements during market, but even after hours, you see we're ending up. So it looks like we might get a gap up. And again, it's coming back to these key points. We've been in this range for a whole nother week. So this will almost be 3 weeks, really 2 full trading weeks of stuck in this range after that big volatility. We did see the yield curve pretty much this will be the second time in this time frame. So we got a little bit of a hint today of what's going to happen with some comments from the Fed, but those were past comments due to the minutes. But let's get into the keys for tomorrow. The Fed juke, that's the first part, but then watch out for the Grim Reaper, which I'm going to talk about here, and it's related to one of the plays that we made today and kind of a play I'm going to be eyeing here for the rest of pretty much the next 2 or so weeks. But the main keys for tomorrow is that the market is digesting what happened today and what went on. I want to show you guys today. This is what happened. It dropped. This was a very big candle when the minutes got released. It came back and up and down, and it pretty much did the same thing to go nowhere. And then we got the move after hours, but again, still being pinned in the top of that range. It's not too much of a movement, but I was expecting a non-event in the sense that the markets really weren't going to do much to the minutes because, again, yesterday we were talking about the divergence and how it's necessary for news and other factors and clues, and we got a lot of that here from the Fed minutes today. We were expecting those not to move the market as much so that other assets could move. But all in all, in the minutes, the market got some clues it didn't like, so we want to wait for the digestion, and that's probably going to come into next week. But the key from the minutes is that they kept holding this whole idea of a mid-cycle adjustment. And this was one of the clues that would have, if the market did go down or did continue to drop down, they probably would have held to this factor. This is the negative side. And again, I even say it, this whole thing that happened with the Fed today, it was a mixed bag, which I think could even sum up where we're at. And we did get positive earnings from Nordstrom's after hours and a few other companies. And even today, this morning, you got some crazy earnings from Target and Lowe's and all that. But the fact that they referred to it as a mid-cycle adjustment as opposed to starting a cutting cycle, this is sending a confusing signal to investors. That's kind of why we got it. That's why you see the markets are still down from when we had those big gap downs. It's stuck in this range. Investors aren't really sure how to price things in and when to take risk on or off. The markets want clarity more than a rate cut. I know it's easy to say, oh, market just wants a rate cut. They're just going to do this if they don't get it. The market's cool with whatever. It just wants more clarity. So if there's uncertainty from trade, uncertainty from the Fed, that's not the good part. So the minutes didn't provide too much clarity. And then there was dissents. There was people who voted against the last rate cut. This highlights a tougher road ahead for future cuts or clarity, because if not, everybody's not on the same page, even at the Fed. This is sending a signal that we might be going and doing this whole back and forth dance. And that's what keeps the markets in this area, because businesses, investors, everybody, even consumers, there's not a set policy that's allowing them to drive anything forward, especially when policy and rates and everything is pretty much, everything's up in the air. There's going to be tariffs. There's going to be no tariffs. This currency is going to do this. The Fed's going to cut. They're not going to cut. Wait, weren't they just raising? So that is the part that's hurting. And that's really what we saw out of the minutes today. But even now coming into Jackson Hole the next few days, that's what we're going to be looking at. So keep your eyes out for that. But again, there was a mixed bag. If anything, we saw references towards quantitative easing. The Fed talked about buying assets and doing something like that. So that was positive. Trump even tweeted about that the other day, like we said. So it was a mixed bag, but clarity is key. So that's the first part, watching the Fed. But now the next part, watch out for the Grim Reaper. What I mean by this is that some big companies might just start getting taken out randomly. Now, we saw that happen over some time with, I think Facebook did it, Netflix did it, I think Google did it. A lot of this happened in 2018, and usually during these times, or if it's going to set up a scenario where there's a big move up or down, or even if the market goes up, we're seeing a lot of things carrying it. I'm not surprised to see a Grim Reaper event. And now that's usually, even now at this point, if there is, a vulnerable spot, one of these could happen. But really just keep your eye out for it. I say a tentative eye, but the Grim Reaper to hit some big company with some weird reason or obscure negative piece, anything from guidance to unforeseen issues, lawsuits. And again, you could say that GE would be one of those. If GE strikes again and GE really does, those rumors end up being true about it. Or if Disney, those are two great examples. But I'm talking one where the news hits, it's confirmed, and it just kills it out of nowhere. Because essentially, even with this much volatility, we haven't seen a big single, really I'm looking for the biggest single day loss of 2019 that's pretty comparable. We saw a few of those in 2018, which made sense with the volatility, but we haven't seen that yet. So I'm keeping my eye out for it around here. And some of the ones I think that it could hit is either going to be Apple or Facebook. But Facebook has already been hit by the Grim Reaper last year in 2018 when it had one of those big earnings misses. That was one of the biggest single day moves, or one of the top 10 biggest single day moves in history on the way down. So watch out for that. And again, the key is to watch Jackson Hole and to see if it provides more clarity from the Fed, and even more so if anything moves the stock market for divergence. That's what I'm going to be looking for, keeping my eye out for that. And again, today, the divergence was kind of confirmed by what we saw. There was a lot of divergence, but a lack of movement after the news. And what I mean by that, it pretty much stayed at the same spot from when the minutes came out. It did move up after hours, as we saw there. So that's a big move, but at the end of the day, it's still in the range. We're not hitting new highs. If it does go above 294, that's going to be a different story. But for now, we saw a lot of assets move today. A lot of the value stocks, they went up 3-4%. Some growth stocks, even the ones we played, Roku, Shopify. So companies are in industries are doing good. Right now, we're diverging the most from transports and financials. Those are still kind of down. But again, these types of moves is what creates it. And then that leads to the final point. All of this goes hand in hand with the yield curve. The invert is happening now a lot more quietly than before. And what I mean by that is the market was inverting in the midst of dropping really low. We were gapping up, gapping down. People were waiting for the news. The tariffs were fresh. There was a lot of noise. So now the invert's happening quietly and it's isolated, and this is where you get to even see now how the markets could go up. Again, we want to see how investors and algorithms and everybody start pricing in what it means for the yield curve to get inverted on the 2 and the 10-year. However, we've seen many times after a full inversion, the market can still go up, but even in these volatile aspects. So we want to see how it plays out and what happens this time, but keep your eye on it and see the effects that it's having. But again, this is only going to happen during a divergence. And so that's where I'm expecting a lot of this to get even maybe pushed into next week. I know the yield curve, the spread, it went a little bit crazy here. It already went up from the close today, but you guys see it pretty much practically inverted right there, and then it bounced up, and that's where it's at now. So we'll see. Again, we've only seen it invert a few times briefly, but we've never seen it hold there. So watch to see how the market adjusts, and that's what we're kind of seeing even already with rates and everything else. It's kind of like the bond rates started dropping, the market got shocked, but now it's kind of easing into the pool. So those are your keys for tomorrow. Keep note of all those. And now for the plays. I didn't play Amazon. I wanted to look at it, but I played Facebook. So I'm going to look to set up a bigger spread. I got these near close. I got 5 September 155 puts for $31. So it was like $150 total. And remember, we bought some of those other ones. We got this week's and the next week yesterday. Those were down, so you could consider this an average down. I'm going to wait till Friday or next week now for the next purchase. You guys are kind of seeing I'm going, striking again, and then if I'm not getting them in those next few days and we don't see an increase, then I'm waiting a few more days to let things level out. But I like Facebook in the sense that now we finally started to see it give up, and it was giving up a lot more. And even when you put it on the daily, this is a crucial spot. Again, I did it the last time it was here. It should have dropped and it fell below there. It fell below there a few times, then it bounced, but then again it came up and dropped again. It kind of reminds me of Boeing. So that's why I was saying they could be the Grim Reaper, but if they do drop here, if any of this news starts to digest, I think it's going to just take one more piece of bad Facebook news. Maybe they'll do it, or something to really stick big on them. But that's why I got Septembers. Then these ones, again, more Septembers on them. And as you can see, I got a better strike price. But watch out for Facebook. Again, it could stall. It could stay up here for a while. So, and the premiums could stay high too, because people are caught after all these bad news pieces. The premium goes up, even if it starts stalling and everything else. So I'm going to look out for that. I'm going to even look to start utilizing spreads or even selling premium to make this work out a little better. And I want to get through all the time frame. But again, I said I've lost a lot of money trying to get puts on Facebook. It holds up pretty well, but I think it has a lot of room to the downside. It's already been pretty low there. Even if we throw up the 1 year, this is pretty much its equilibrium. It could go down a little bit more. So watch out for that. We got those puts. We have those plays. Then we got the Shopify this morning, and I think these ones are barely up. So we did a TLT next week. That one was kind of a YOLO, more gambly type play on that. And then we got the Roku 155s and then the Shop 435s for 50 cents. But I got next week, and both of these plays are premium sells. Not in the sense that I sold premium, but what I mean by this is that I'm going to look to flip the premium. Do I think it could really go up here? Probably not. But the thing is, I got this in the morning when it was at 380. Now it's at 391. So who knows with time, but I missed out at yesterday, and even then, I'm going to show you guys the rest of the plays beyond the ones we played today. The ones I want you guys to watch for tomorrow is the stuff that's winning, the stuff that's already working and kind of able to show these big moves despite what's going on with the market. But we got those. I like them. If those go up even 100, 200%, I may just look, that's what I'm trying to do, is flip them or set it up where I could get a good premium sell or a spread, maybe turn it into a win-win, who knows. But I like Shopify. And then we got the Rokus. Same thing, I got 1 week out. And again, like I said yesterday, the weeklies are tempting. Just go 1 week out. Something like September with Facebook, trying to get one of these, I guess, if you're expecting a drop. And again, Apple too, I grabbed it next week on that one, but I think I need to grab Septembers on those tomorrow. But we're going to see. Apple has been a behemoth. But we grabbed these 155s for 31 cents. They doubled pretty much at one point. They came down. Roku did the same thing. Again, I don't think these stocks are going to move, bigger percentages, at least for Roku. This is next week 10%, whereas I think the other one, when I got the Shopify, it was like a 15%, but then it moved that 5 or so percent today. But I like those. I think it's a little late to get in. I'm showing you guys these because if they do come down in value, you could average in and get into that. And usually during these trips, that's what happens on some of these. But you got to keep watch to see how the market reacts to all those in general. But I like Roku and I like Shopify. We made those. I'm still holding the Bank of America, the 27, and kind of how they moved after the Fed makes me kind of want to watch them. And again, financials are lagging behind, so keep your eye out for that. We're still holding that straddle. I think it's down because the call is pretty much worthless and the put's right at the money, and that's just fluctuating. So that one's probably going to be one we're going to have to ride out till the end of the week. We got the FedExes. Unfortunately, the September ones I got up, those are still down, but they came up a lot today. The weeklies are in the trash. We did it, and somebody even said, we were just a few days late, and yeah, that was the point, is that we were expecting the run up, but hopefully you see how timing is important. That makes sense with kind of why I average as I do. But again, you got to be careful trying to get it too much, but we're waiting on those. At least I think we have some for next week, or at least the September. So going to set up from there and go from there, but still watching and waiting if there is a good time for decay or we see the divergence closing between transports. This one could still be a big runner. So again, it's better to be late than wrong. And in this case, you saw what happened. If you were late to this and just waited till it went up, you could have got a pretty good fill in there. So watch that. Then watch Walmart. I wanted to look at this one just in the sense, remember we put that up on Wednesday. I want to see where those are at. I haven't got those contracts, but this is kind of one of those late than nevers because it dropped yesterday and then came down. But here are those 107s. They were at like 10, 12, 13 cents, I'd say. They shot up to 26 cents. They came back down to 11 cents this morning, and they closed at 16. So you're kind of seeing, but if Walmart starts, again, the daily chart looks like it's holding up, but if that does start to give up like it did the day before, these contracts were fairly cheap. But again, timing is going to be key. So some of these weeklies, and if we start getting cucked like we did this last week, these will decay and not do anything very, very fast. So be careful for those. So I like those. Now the theme of what to watch tomorrow and what I'm going to keep my eyes out for are the stocks that did very, very well today and pretty much continued momentum. Home Depot is one. These are expensive. And again, tomorrow's going to be Thursday. So it's either we could find some place to snipe tomorrow, or you spot the ones you want tomorrow and then wait to get into them Friday, or we position ourselves then, or we even find out, hey, there's still not as much clarity and we're going to have to wait and get into something on Monday. But Home Depot is one of those. I wanted those on Monday. The contracts, they kept going up and up. They're still expensive. Same thing with McDonald's, but the premium on the McDonald's calls dropped. So the calls are not expecting too much. So I'm going to keep a good eye on McDonald's, and we're seeing it's right next to that 2250. So we'll see what happens. And then Boeing now, this is kind of like Shopify. We played Shopify today, and again, I watched Shopify all day yesterday. It shot up. We missed it. Got into it early this morning. It kept going. Boeing's kind of done the same thing. So it gapped up Monday, then it came down Tuesday, and now it went up today. If it keeps going up tomorrow, the contracts today, they were lagging. Some of them were 30, 40 cents. They closed at about $1.50, $2. If this still continues and tomorrow's a good day and there's still that momentum, and again, like I'm saying, the winners, if people are just going to flock to what's working and what's winning, these could be a play, and I'm going to keep my eye on the call side for those. Target is earnings. Now the options, this already went up 20%. They didn't have a lot of options on the chain because it surprised so much. Tomorrow, you're going to see a whole new set of strike prices as the market makers create a market for those new strike prices, and we'll see what there is in the morning. This could be a good one. Again, the key is continuation, or if there's a bigger sell-off. Lowe's kind of sold off a big amount today from like 110 to like 107, but that's going to be hard to catch off the morning unless it's like if Lowe's came back to like 104 maybe, or like 100, that would be even better. Those are the ones you want to get on the earnings failed come down. So watch out for that, but watch Lowe's even on the high side. Nordstrom's, we have that play. After hours, they shot up to $29, so they're up 18%. We'll see how that is and watch some of the other retailers. Our contracts, they're probably not going to go up. Those are so in the graveyard, but we'll see if there is any upgrades or downgrades or anything that comes out. But I think those contracts still have September, October, so we could chill on those for a little, but we'll see. But again, if there is some cheap in the morning and Nordstrom's going to keep going up another 10% tomorrow, we might be able to find a good play to grab in the morning, and that's what you should look at for every single one of these here. Oh, and last I forgot about it. It's not IBB, but Tesla. I did make that Tesla play. We got a next week spread, I believe. Yeah, I got the Tesla 185, 180 put spread for August 30th. Next week. And again, I said I wanted to play it here again. It looks like it's weak. Now they're getting the lawsuit. Tesla's already been kind of bad. I don't like playing Tesla too much. And you could see it based on the play I made. I put down like $11. So I bought the 185 and sold the 180. It's a $500 max reward. It's the spread. But even right now, if you bought at 32 and sold at 20, you'd pay $12. So I only put a small amount for a reason. Again, if it did end up dropping, even if it didn't get here by that time, but we saw a big drop and a break below support, this spread, the difference between the prices should go up and we'd be able to profit a little bit. But the whole idea, I wanted some exposure to Tesla, but I don't think it was worth more than $12, $10 even. But keep your eye out for that. I like that. And then lastly, these are stocks that I think might get hit by the Grim Reaper. There's a few different sets here. These ones aren't Grim Reaper ones, but Zag was saying that there's like competing buyout offers. So watch out for that. These are just news related. PBR, Petro Brasilio, Petrobras, I don't know how to say it, but they had a rumor of them going private, and they're pretty interesting. They're very big. Don't let the share price fool you. They're a pretty big company, and again, they've been pretty much up in these last few years, so I don't know what a take-back price could be on there. It's really, really hard to speculate, but there's a rumor of that. But again, you guys, the similar rumor to Nordstrom's, but keep your eye out for that. And both of those are such cheap stocks. The options aren't too attractive. 100 shares would give you, imagine if it fell off here, you bought 100 shares at $13.80. Again, it's $1,300. But if it dropped down to $13.40, you lose $50 on 100 shares versus spending $50 on a contract and then it expires, where you could just hold the shares. You could even sell premium on it. Same thing even with Zag. So keep your eye out for that. But there's that. And then the ones that I think could get, and then Guild, they had I think they're challenging a drug approval or something of that nature. So that could be interesting, but it does make me even want to see some of the biotech companies. And then these are the ones, IBM, Intel, Qualcomm. I'd watch these. Again, these are the kind of the slower movers. They could have big names, but they have different sorts of exposure. And Apple as well, too, I think. And Apple was Apple's still leading, but it looked a little weird today. But watch these types of companies, but especially the IBM, Qualcomm, Intel. For those maybe could be the Grim Reaper ones, maybe Microsoft, but I got those Microsoft calls yesterday. Those died. They were up a little bit, but now they're pretty much dead. But yes, That is your watch list, my friend. So I'll see you tomorrow morning. Make sure you're there pre-market. Make sure you're hydrated, ready to go. Make sure you read all disclaimers. Understand option trading is extremely risky. You can lose all, if not most of your financial investment. Please consult with a financial advisor. Understand the cult loves you. Understand you need to chill out. Understand what volatility is. Understand your pony. Understand your brokerage. Understand you won't understand everything. Understand what you're buying. Just understand everything. So let's go!